All right. Hello, everybody. Welcome to Korean Atlanta Mentorship. And in this video, we're just going to do another velocity banking review. Last video, we did a review as a millionaire. And this time, we're going to do a review as a multi-millionaire, someone who makes $10 million a year. And $10 million a year after tax monthly salary is about $467,000 a month. So what we're going to do is pay off debt as a multimillionaire, not a millionaire, multimillionaire, and see how we could get rid of the debt. And so here we have i- a situation where the income is very close to the expenses. We have $5,000 of savings a month, and as someone who makes great money, I'd be panicking if I only had $5,000 a month savings. Now, I know that if we don't make that much money, that's a great savings rate. But as someone who's what do I call it? A multimillionaire, that's disgraceful. Okay. All right. So let's go ahead and do the first step in velocity banking, which is always the budget. You have your income, you have your expenses, and then you do your expense breakdown. So you could see right here. We have 6 credit cards. Each credit card is like $1 million limit. I don't even know if they do this in real life. Maybe in like the business world, they'll give you $1 million limits, but I don't even know if they do this in the personal world, and they probably do, right? They probably do. But yes, $1 million credit cards, and we decide to rack up some debt, okay? And then you see that each payment is about 48 grand, 85 grand, 105. It's amazing and it's crazy, right? That's the minimum payments of these credit cards. And then 3 auto loans, so we'll assume that, we're a little bit bougie, and we got 2 brand new trucks because brand new trucks are, I think, in the 70 to 90 grand range, so we got 2 truck loans, okay? And then we got maybe like a loan for a Mercedes or a BMW, so I think this is the $40,000 auto loan, and, so you can see here is a big difference between, the credit cards versus these auto loans right here. Now, here's, something new that we're gonna do. We're going to do a business loan. All right. So, assuming that our business is supported by maybe like an SBA loan. So, if you kind of take a look here, SBA loan, they're kind of like the Freddie and no, I'm sorry, Fannie and Freddie of the mortgage world. I think, again, I don't know too much about this world, right? But they kind of make it easier to get loans for a business. It's like a government kind of semi guarantee when you're purchasing a business, but it says you get terms from 3 to 25 years, and the interest rate is about, 2 to 4, really low, and you get a maximum loan amount of about 5,000,000, so they kind of, you got a good business that you're gonna purchase and you wanna go from broke to not broke. I think this might be a good option, just like how a lot of people use government programs to get into a first house. Again, I've never used this, but, I think it looks pretty cool, right? So, all right, let's go down here. So $2 million. So again, we're below that $5 million mark with 19 grand of payments per month. And not only that, we got a $3 million mortgage. $3 million mortgage, okay? And so here we have all of our general expenses, which is food, gas, insurance. And because we're a multimillionaire, we average about 10 grand per month in our general expenses. Multimillionaire. Okay. All right. So, yeah, let's go ahead and do it. Velocity banking. And so, what is velocity banking? All it is a debt payoff strategy where you throw all of your money into debt with the help of a line of credit. And I think if people were in this situation, they'd be having a little bit trouble. Like, what do I do? And I think people who make a lot of money still fall into trap that they need savings. So it doesn't matter whether you make, a ton of money or not that much money. Just don't save money is like kind of the mantra of velocity banking, and do it with the help of a line of credit. Okay. So kind of take a look here. I don't save money, right? I don't save money. And I think if this is the amount of money that I made and I had all these debt payments, I'd like be having a heart attack, right? Like 48 grand for one credit card. Oh my goodness, right? But once you have the money that to come in to support your debt, then it should not be a problem. And here's the other thing that people don't know is that banks don't lend money to people who need it, right? The bank only wants to lend up to amount that they think you're gonna have trouble swimming, but they don't want you to drown, right? And that's why banks don't lend money to people who need it, because they evaluate your income and also your credit profile. They evaluate risk and say, "Hey, we know this person is very likely just to keep making payments," right? And that's what credit is about, just keeping making payments. Okay? And so what we're trying to do is get rid of the payments, pay less interest, and throw all of our money to debt with the help of a line of credit. So, what's a line of credit? All it is a financial tool where you can borrow money, pay back, and then use it over and over again. So, this is my $280,000 home equity line of credit. Basically, it just means because I own a home, I can offer it as collateral and I have equity in it, or because I have home equity, I can offer it as collateral, and then the bank will allow me to take up to $280,000 with the stroke of a button on my cell phone. Man, I wanna say with a snap, but I can't snap, $280,000 into my, cell phone, unfortunately, or my checking account. They charged me a 7.5% interest rate, but we're gonna use the help of a line of credit, and actually, let's do this. How much of a credit line should we have? And actually, this is from a previous demonstration, so let me erase this. I always like to, for demonstration purposes, kind of cheat, right? So what I mean by that is that I always like to get an amount that's a little bit higher than the amount of credit cards I have. So let's add the credit card debt. But the bank is not going to ever lend you a line of credit usually if you need money. So if we're in a situation like, dang it, we only have $5,000 a month and we need money, that's the worst time to go to a bank, right? Because banks don't lend money to people who need it. That's how I got my last credit line of what was it? What was my last credit line of 8,000? Wait, was it 8,000? Yeah, $8,200. That's my last credit line. All right. So the way that this works, okay, the way that this works is that we're going to start moving debts into the line of credit, even though it's free and clear, kind of unrealistic here at this point. But it's kind of like, think of it as car insurance, okay? So the way that I want you to think of it is that when you're here, you kind of crash the car. And if you had a $1.3 million line of credit, that'd be like having car insurance when you crash the car, right? So the thing is, there's a certain order you have to do things. So you don't crash the car and then get car insurance. What you do is you get car insurance first and then you crash the car, right? This line of credit is kind of like your safety net. You have to think of it like that. Most people, they want to crash the car and they get car insurance, aka, hey, I'm going to screw up in my finances and then I'm going to try to get a line of credit. Again, banks don't lend money to people who need it. Okay, they don't. Right. So let's go ahead and do this, and we are going to move some of our debt, which is going to be, and I'm going to put an extra zero here. Okay. Wait a minute. Can I not put an extra zero? Yeah, 13 million. So we're going to move 1, 2, 4, 5, 0, 0, 0, 0. Okay, 12.45 million into the line of credit. Okay, but we assume the same income, and then we assume the same expenses, right? And then we're not going to save money. This is a zero. We're being intentional about this. Like people would like be freaking out, like Dave Ramsey, where it's like, we need to save $1,000. Now we could have $1,000 easily saved, right, in month one. But this is pathetic, right? So, what we're gonna do is have something called cash flow, but we're not gonna save money right here, right? We're not gonna save money. As money comes in, it just goes out, okay? And we're gonna do once we move some debt, we're gonna increase our cash flow. How do we increase our cash flow? It's because these payments just magically go away. 0, 0, 2.7 million, 3 million. Oh my goodness. Oh my goodness, look at that. We literally went from $5,000 a month of savings to $421,000 in cash flow. And then what we're going to do is put our entire paycheck into the line of credit, this entire $467,000 that we get as a multimillionaire, put it into line of credit, and then take our expenses out and then rinse and repeat over and over again. Okay, so that's what we're going to do. All right, so now what we're going to do is calculate the next month's balance, which is based on the previous month's balance, previous month's interest minus our cash flow. 421230.74. And then what we're going to do is take the average daily balance. Let's go ahead and do that because that's how the interest is calculated on. Multiply it by the interest rate and then divide by 12. All right. And so first month we got to pay 81 grand of interest on about $12 million of debt. Ooh, that's not good. Well, actually, it is pretty good because it's look at that. We paid off 2 million in 6 months. Whoa. Oh, I wonder how many multimillionaires there are struggling with their debt, and I'm pretty sure there probably is, given that that's how a lot of the banking industry, um, they want people who have money but are kind of dumb with it, and you'll be surprised to find out how many people who make decent money and are pretty bad with it. All right, so now in 33 months we paid off that debt. Ooh, that was pretty good. 33 months. 33 months, and then we paid off $12.45 million of debt. And right. And then so right, auto loan and business loan. So let's go ahead and update our loan calculator at 33. Whoopsie. It's from a previous demonstration, but I updated numbers. All right, let's put in the current month 33, 33, 33, 33, 33. All right, so if you don't know, so this is the current balance of the loan right here. This is the current balance of all these loans, right? And so which loans are we moving to a line of credit? Well, we use something called the cash flow index to help us determine that, right? Basically, all it is the balance of the loan divided by the payment, and it gives us an arbitrary number, and the lower the number, the better. So that's like a ranking system, okay? The lower the number, that's the one you want to pay off first because you're getting more bang for your buck. Why? If you get the higher number, and you move your loan into a line of credit, especially a higher interest line of credit, okay? Like let's say we're going from this one right here, $2.8 million, 3% to an 8% line of credit. We have to think about the cash flow that we get, okay? We're thinking about terms of cash flow. So I pay off $2.8 million to get 12 grand back in my cash flow, or I could pay 1.5 million to get 19 grand back, right? To get 19 grand back. All right. And so which one gives you more bang for your buck? Well, according to the cash flow index, it's these three loans, the lowest numbers. Okay. You said definitely don't want to pay 2.8 million just to get 12 grand when there's other options to get more bang for your buck. Okay. So I'm going to go ahead and copy and paste this. I'm going to sum this up, and it's going to be 101 grand of auto loans that we're going to move in here, and we probably pay that off without even increasing our cash flow. Oh my goodness. Plus 101,074.48. Oh my goodness, these auto loans were paid off. Can you believe it? All right, 000. All right, what's our new cash flow? It's 425 grand. All right, so all right. Okay. All right. So I think we're still at a negative, right? Is this a negative number? I feel like maybe it's not. All right. So we paid it off in 1 month. Okay. Okay. Wait, let me just go back 1 second. Yeah. So it was a negative number. I just want to check my math. 101,074.48. Okay, so let's go back here, and then this is going to be 0,000, right? And then 425 back of our in our cash flow. Okay, and I'm going to do this 425 grand. Okay, so this took us literally oh my goodness, like 1 month. 425,133.6. It literally made no difference in our payoff. So this is going to be paid off in 34 months, right? So 34 months equals 12.45. It's still basically 12, I think 12. Hold on. 1245000. Okay. Plus 80,000 plus 90,000, right? 12.62 million. So 34 months and then 12.62 million. Okay. All right. So now we got this $2 million business loan and $3 million business loan. Oh my goodness. All right. So let's go ahead and update these figures in 34, 34. And because these loans are relatively low interest rate and they don't give us that much cash flow, especially this 30-year mortgage, we don't want to move it into an 8% line of credit. But one of the crazy things that you'll notice is that if you move pieces of the loan, like a 8% or 3% loan into 8% line of credit, the minimal the use of an 8%, that 8%, it has like a minimal effect on that 3% loan, and we can still pay it off relatively quickly using a method called chunking. So what we're going to do is maybe take off, we'll say, a $500,000 chunk of the $1.4 million loan. Gosh, this is going to be paid off relatively easy. But what do I mean by that? So let's say we add 5 million, okay, to here. So this is going to be plus 500,000, okay, and 5 million, and we pay it off. Well, is it 5 million or did I say 500,000? I'm sorry, my bad, 500,000. Okay. And then we pay it off with a cash flow. Look, that $500,000 was paid off in like 1 month. Perks of being multi-millionaire, am I right? And then we just rinse and repeat over and over again, right? 5 million, like we just 3 chunks. That was easy. I think we're gonna get this paid off in like a couple of months. Oh my goodness. Excuse me. All right, so let's go ahead and open the Velocity Banking Calculator, figure out how long it'll take us to pay off those $2 million loans. So give me one moment. All right, so the cool thing about this loan or Velocity Banking Calculator is I just have to put in the numbers and then just spit out details and all that good stuff. And so this is what we're going to do, which is put in our income, 467,094, 467,094. And then we'll say a $500,000 chunk, okay? And then, what are we gonna do? I don't even know. I'm just kidding. What's our expenses? Everything except for the loan we're trying to pay off. So it's these two. We're gonna focus on the business loan first. So let's go ahead and do that. And let's sum this up. 22648.12, right? 22648.12. Now, I know what some of you might be thinking, okay? You have $425,000 left over. Why not directly pay your loan? And you can do that, right? But the reason why we got into the situation that we're getting to in the first place is because we simply segregated our income. So we want to make it very easy for us to dump everything in one place, maintain control and liquidity, right? And not segregate our income. And I need to go more into details into that in another video. I've done several videos about that, but it's kind of more of an abstract concept that people don't really understand, like why even use a line of credit at this point. And you just directly pay the the extra savings into the line of credit. But remember, you want a little bit of flexibility. You want to make it easy on yourself. It's like if you pay directly with your savings into a loan, you know what that's like? That's like trying to get the most discounted price and go to the gym on New Year's, right? You're going to do something that you're not likely to do. So use a line of credit, use chunk a little bit, and then just dump all your money into the line of credit. And if you don't need that, then you don't need that. Like I'm going to straight up tell you, like, hey, at this point, you can just dump all of your savings into the loan. You can do that too. All right. So let me go ahead and put that in, and what's the original balance, which is, I don't even know. It's $2 million. It's a $2 million SBA loan. Just as long as it's $5 million, the SBA will fund it. All right. So now it's 1492768.34. 1492768.34. And then the payment amount is, let's do 19312.15. 19312.15. Whoa, look at that. We paid it off in like 0.3 years. I figured it'd be really quick, right? $2 million loan. Okay. $2 million loan in 0.3 years. Holy bazookas. That's insane. All right. So 0.3 years. All right. So let's go ahead and do this. And so it'll be 34 months plus it's 0.3 times 12. That's going to be 38 months, right? All right. So 38 months and it'll be 14.62 mil. I'm telling you, you want to know how to solve your problems? And I know I'm kind of being tongue in cheek about this. Be a multimillionaire. Back in the day, it's like, well, you just got to make more money. I'm like, what? That doesn't make any sense. And then I kind of get it now, but it's kind of hard to translate that as a way to like just make more money when you're broke. Just make more money, bro. Just work harder. It's kind of abstract advice that eventually, as you do make more money, it will make sense. Kind of like when I tell you banks don't lend money to people who need it. Like I remember when I first heard that when I was broke, I was like, "What the f are you talking about? If I didn't need money, I wouldn't go to a bank." And then you kind of realize, like, hey, you'll still use a bank because let's say like you make $1 million, it's gonna be very hard for you to save, let's say, 20 million because you have that 1 million, now the bank is gonna kind of be like a multiplier of that 1 million, right? But if you have no money or you're bad at managing money, like extremely bad, bank don't want anything to do with you. Okay. So let's go back here. So 38 months. So this is 0 and then this is 38, right? And let's go ahead and do this with our $3 million loan. Oh, wait a minute, I screwed up. This should be 10. I don't know. Let's see if it makes a difference. It doesn't make a difference either way. 0.3 years. Okay, so let's go ahead and do this. All right, so now what's our living expenses? It should just be the $10,000, right? $10,000. So we're gonna get rid of this 30-year loan pretty quickly. Pretty quickly. It's funny. I probably should just do multi-millionaire scenarios because I feel like if I just keep doing like small amount scenarios, then my mind is going to kind of think that that's all I can do. So if I just do like multi-million-dollar scenarios from now on, I think I'll just be a multi-millionaire, right? You know what I mean? Like there's a component of life where it's like, hey, if that's all you think about, then it'll come true. Or that's what it feels like. You know what I mean? All right, so $3 million. $3 million. Okay. So this is going to be 3 for 30 years. And what's the payment amount, which is 12,648.12, 12,648.12. And then the current balance is 2795046.1, 2795046.1. Okay. No, I put the wrong number. It should be 2. It should be 2. All right. So 0.6 years to pay off that 30-year mortgage. Amazing. All right. So I guess that'd just be like 1 year, wouldn't it? So because the other one's 0.4, this one 0.6, whatever. All right. So it goes 38 plus 0.6 times 12. So that's 40. We'll say 46 months. About 46 divided by 12. So that's 3.83 years and to be debt free. Sweet. Now this 12 grand mortgage payment is gone, and now we're in rich people problem land. Rich people problems. Okay. So now I don't even know what to do. How much debt do we pay off? 14. So this is we actually paid off 17.62 million debt free. Okay, 7.62 million debt free. And yeah, we did it in 3.83 years. 3.83 years. Can you believe it? I can't believe it. I can't believe it's not even butter. Remember that guy? I can't believe it. Folks, I'm pretty sure there's plenty of people out there who make this money and are in this situation. I mean, I see him calling like Dave Ramsey's Entree Leadership show all the time. You know what I mean? But I'm pretty sure like Man, I need to get myself into this situation. Just get like a $2 million business loan to get like a couple million. You know what I mean? And then I will be raking it in. And then I will have true rich people problems. So when I look at this, it's like only 19 grand a month. You know? Wouldn't that be a nice problem to have? Rich people problems. All right. Well, that's it for today, folks. This is Korean Atlanta Mentorship, and have a great day. And I'll see you all in the next video.